Welcome back, students. Let us continue with the journal entries. Cash deposited into bank rupees 50,000. So let us start with the steps. First step, we need to identify the two accounts involved. We have cash, we have bank. So cash account and bank account. So cash comes under real. All assets comes under real account. Bank comes under personal account. So what is the golden rule for real? Debit what comes in and credit what goes out. For personal, debit the receiver and credit the giver. So when we deposit cash into bank, bank is receiving it. So debit the receiver. Cash is going out of the business. Credit what goes out. So shall we write the entry now? Bank account debtor to cash account. Cash deposited into bank. Here I would like to tell you the importance of narration. It is human nature to make mistakes, right? If we make any mistake while writing the entry, instead of debiting bank, if we debit cash, if you write cash account debtor to bank, what does it mean? So it means you are withdrawing cash from the bank. So by mistake, we would have interchanged the debit and the credit aspect. But what helps us to identify the error? It is only the narration. Right? So it is very important for us to write the narration after each and every entry. So this helps us to rectify if we make any mistake. That is the importance of narration. $50,000. Bank account debtor to cash account. Cash deposited into bank. The next transaction, paid salary 25,000. Paid salary. When we make a payment, cash is involved. So what are those two accounts involved here? Cash and salary. Cash comes under real account. Salary is an expense. From the business point of view, salary is an expense. We are making a payment to our staff. So this salary which is being paid is an expense from the business point of view. So all expenses comes under nominal. So what is the rule for real account? Debit what comes in credit what goes out. Nominal, debit all expenses and losses, credit all incomes and gains. So when we are paying salary, cash is going out of the business, right? So credit what goes out. Salary being an expense from the business point of view, under nominal account, debit all expenses and losses. So we are going to debit salary. So what will be our entry? Salary account debtor to cash account. Paid salary. The next transaction, paid salary 25,000 by check, or if it is being transferred through NEFT or through electronic clearing system. So any mode, if you come across these things, it is related to bank. So first step, as I told you, you have to identify the two accounts involved. One we have found out bank, the other one is salary. Here cash is not involved. Okay, you are making a payment through check. Able to understand? Whenever we come across check or NEFT or ECS, it is connected with bank. So salary and bank are the two accounts involved here. Salary comes under nominal account. Bank comes under personal account. Under nominal, debit all expenses and losses, credit all incomes and gains. Salary is an expense from the business point of view. We are paying salary to the staff. So cash, as we are paying through check. Now bank is involved. Okay, so bank comes under personal account. Debit the receiver, credit the giver. Now bank is making the payment on our behalf, right? So credit the giver. Bank is making the payment on our behalf. So credit the giver. Salary being an expense, debit all expenses and losses. Salary should be debited. Salary account debtor to bank. Paid salary through check or whatever, whether it is through ECS, whatever is given in the transaction, write it. Able to understand, children? The next transaction, cash sales, rupees 12,000. So now what are those two things involved here? Cash and sales. Cash, real account. Sales, it can either be treated as a real account item or a nominal account item. So here I am going to take it as a real account item. So what is the rule? Debit what comes in, credit what goes out. So when we make a cash sale, cash is coming inside the business and goods are going out of the business. So debit what comes in. Cash is coming inside the business. So we are going to debit cash. So what is going out when we make a sale? Goods are going out. So sales should be credited. So shall we now write the entry? Cash account data to sales account, rupees 12,000. Cash sales made. The next transaction, sold goods to Deepa on credit, rupees 7,500. Suppose if this word credit is not given, just sold goods to Deepa, rupees 7,500. Even then it will be treated as a credit transaction. Able to understand? Only if we have the word cash mentioned in the transaction, it is going to be a cash sale. If just a name has been given, name of the customer has been given, then it is going to be a credit transaction. Right? So now this transaction is a credit transaction. They have mentioned the word credit. So you need not worry. So now what are those two accounts involved here? Sales and Deepa. Sales and Deepa are those two accounts involved here. Now, sales comes under real. It can either be a real account item or nominal. I am going to take it as a real account item. So, Deepa comes under personal, name of a person, natural person. So, personal account. So, what is the rule? For real, it is debit what comes in, credit what goes out. For personal account, debit the receiver and credit the giver. Now, when goods are being sold to Deepa, Deepa is not making the payment immediately. She is just receiving the goods. She is the receiver of goods. So, we are going to debit the receiver. Deepa account has to be debited. When we make a sale, goods are going out of the business. So, sales must be credited. Credit what goes out. So, what should be the entry now? Deepa account debtor to sales account. Sold goods to Deepa on credit. The next transaction, sold goods to Alex for cash, rupees 5,000. Now you have three things there, sales, Alex, cash. You have to be very careful. The word cash has been given. So when a cash sale is being made, we need not think about the customer's name. When will we record our customer's name? Only when there is a credit transaction, we need to follow up to get our money. Only for that purpose, we need the customer's name, address, all the other information. Right? Otherwise, we are least bother whether we are selling to Mr. A or Mr. B or anybody else. So here it is clearly given, sold goods to Alex for cash. We are going to consider cash. Just ignore Alex. So the two accounts involved here are sales account and cash account. Able to understand? So sales comes under real or nominal. I am going to take it as real. Cash also real. When we make a sale, we are going to receive cash. So debit what comes in, credit what goes out. So cash is going to come inside the business and goods are going out when we make a sale. So what should be the entry? Cash account debtor to sales. Rupees 5,000. So must be very careful while reading the transaction. Sold goods to Alex for cash. Even if you write the entire thing, sold goods to Alex for cash, or you leave out Alex and just write sold goods for cash, anything is fine. Able to understand, children? The next transaction, sold goods to Vanitha who paid through debit card rupees 10,000. So it's a point of sale. So you are selling goods to a customer named Vanitha and she has paid through debit card. So now it is going to be bank to bank. So when a debit card has been used, so it is going to be bank to bank. Now what are those two accounts involved here? One is sales, goods are sold. Now ignore Vanitha. It is not a credit transaction. She has made the payment immediately using her debit card. So what is involved here? Bank. So these are the two accounts involved. Sales, comes under real, I am going to take it as real. It can either be taken as a real account item or a nominal account item. I am going to take it as real. Bank comes under personal. Now, when Vanita pays through her debit card, the amount is being transferred from Vanita's account to our bank account. Able to understand? Now, when we receive the payment, who is going to receive the payment on our behalf? Our banker is going to receive the payment on our behalf. Right? Under personal account, debit the receiver, credit the giver. So our banker is going to receive the payment on our behalf. It will be credited to our account, right? Now our banker is the receiver. So debit the receiver. Bank is going to be debited. So what about real? Debit what comes in and credit what goes out. So when a sale has been made, goods are going out of the business, so credit what goes out. We are going to credit sales. So what is going to be the entry now? Bank account debtor to sales account 10,000. Goods sold to Vanita, who paid through debit card. Or goods sold to Vanita and payment received through debit card. Payment received through debit card.